Is Airbnb stock a buy, hold or sell, and what is Airbnb's fair intrinsic value? I am going to answer these questions in this video. Hello everyone, this is Victor here. Welcome to the Intelligent Investor channel, where you will learn about stock investing and personal finance that will help you become a great investor. In today's video, I am going to talk to you about whether Airbnb stock is a buy, hold or sell. And to answer these questions, I will cover these topics. First, what is Airbnb's fair intrinsic value and is Airbnb overvalued? Second, what is Airbnb's business model and how does Airbnb earn its revenues? Third, what are Airbnb's competitive advantage? Fourth, what are Airbnb's long-term growth prospects? Fifth, what are Airbnb's major risks? Sixth, summary, is Airbnb a buy, hold or sell? If you like this video, make sure to smash the like button and subscribe and turn on the notification button. I will continue to make many great videos about stock investing and personal finance that will help you become a great investor. Let's start. First, what is Airbnb's fair intrinsic value and is Airbnb overvalued? Now, at the time of making this video, Airbnb stock is traded at 157 per share or 94 billion in market cap. Less than 2 weeks ago, Airbnb had an initial public offering IPO on December 9th. Airbnb's IPO was priced at $68 per share or around 47 billion in market cap. Then on the first trading day, on December 10th, the stock increased to as much as $165 per share or over 100 billion in market cap. If you're investing in Airbnb stock, you may wonder, is Airbnb stock currently overvalued and what is Airbnb's fair interest value? It's always the best to invest in a company when it is fairly valued or even better when it's undervalued. And it's always not a good idea to invest in a company when it's overvalued because the risk is much higher. Now, first, to find out if Airbnb stock is overvalued, we have to estimate Airbnb's stock's fair value. The current pandemic has the biggest impact on Airbnb's revenue as well as all other companies in the travel industry throughout 2020. And to estimate Airbnb's fair interest value, we have to use Airbnb's total revenue in 2019 before the pandemic started. Airbnb has not made any net profit since its inception yet, so we cannot use the net profit to estimate Airbnb's interest value. Second, we need to compare Airbnb's price to sales ratio, the PS ratio, to Booking Holdings price to sales ratio to find a more reasonable price to sales ratio for Airbnb to estimate its fair interest value. Booking Holdings is Airbnb's largest competitor, and Airbnb's revenue grew at a compound annual growth rate CAGR of 36.96% between 2017 and 2019, and its current price to sales ratio is 25.92. In comparison, Booking Holdings revenue grew at a much lower compound annual growth rate CAGR of 9% each year between 2017 and 2019, and its current price to sales ratio is 9.67. Airbnb's price to sales ratio is 2.68 times higher than Booking Holdings price to sales ratio because Airbnb's revenue is growing at a much higher rate than Booking Holdings. But to be fair, Airbnb has not made any profits since its inception. For example, Airbnb had a 674 million net loss in 2019, while Booking Holdings had a 7.87 billion net income in 2019. So according to Airbnb's prospectus, management said, we have experienced significant revenue growth in the past. However, our revenue growth has slowed in recent periods. There is no assurance that historical growth rates will return. Our year-over-year growth rate in revenue decreased in 2019 as compared to 2018, and they also decreased in 2018 as compared to 2017. So what does this mean to you? It simply means that we need to use a more reasonable price to sales ratio on Airbnb because its future revenue growth is expected to be lower than previous years once the pandemic is over. Here's a more reasonable case scenario. Let's give Airbnb the same price to sales ratio of 9.67 as Booking Holdings because Airbnb's future revenue growth is expected to slow. So if we multiply Airbnb's 4.8 billion revenue in 2019 by 9.67, its fair value would be at 46 billion or $71 per share. Now in comparison, Airbnb's IPO was valued at around 47 billion. Here is a very optimistic bullish case scenario. Since Airbnb's revenue is growing at a much higher rate than Booking Holdings, we will give Airbnb a price to sales ratio of 19.34. This is 2 times of Booking Holdings' 9.67 price to sales ratio. If we multiply Airbnb's 4.8 billion revenue in 2019 by 19.34, Airbnb's fair value would be at around 93 billion in market cap or $154 per share. So in comparison, Airbnb is currently at 94 billion in market cap or $157 per share. So if we look at both case scenarios, Airbnb at 94 billion in market cap or $157 per share is either fairly valued or overvalued. I believe Airbnb is overvalued now because the company's revenue growth already started slowing between 2017 and 2019 before the pandemic started. What is Airbnb's business model and how does it earn its revenues? As you may already know, Airbnb is the market leader in short-term vacation rentals around the world. As of September 30th, 2020, Airbnb has 5.6 million active listings worldwide and operates in 220 countries. Airbnb is a platform that allows hosts to list their properties for short-term vacation rentals, and the platform also connects travelers or renters to hosts. Hosts list their properties for short-term rentals on Airbnb can generally earn a higher income than renting their homes to long-term tenants. And travelers using Airbnb to look for short-term vacation rentals can often save a lot more money than living in hotels. Now, how does Airbnb earn its revenues? Airbnb earns most of its revenues from service fees on each listing and booking. According to Investopedia, renters are charged a non-refundable service fee of under 14.2% based on the listing. Hosts are also charged a fee of no more than 3% for every completed booking. If you're investing in Airbnb, you may wonder, what are Airbnb's competitive advantage? Airbnb's first biggest competitive advantage is that it's often much cheaper for travelers to rent from Airbnb's listings than living at hotels. Many young travelers in their 20s or 30s choose Airbnb instead of the traditional hotels because it saves them a lot of money. It's also because living in a house or a condo gives them a more authentic local experience compared with living in a hotel that has a lot of restrictions. Airbnb's second biggest competitive advantage is that it has the largest selection of short-term rental listings. As far as I know, no other competitors such as Booking.com and Expedia offer as many short-term rental listings as Airbnb. Most guests who are looking for vacation rentals always use Airbnb's first before using other platforms. So what are Airbnb's long-term growth prospects? According to Airbnb's prospectus, the company estimates that it has a serviceable available market of 1.2 trillion for short-term stays. And according to the 2019 Global Hotel Study report by STR, the global hotel industry had 550 billion in rooms revenues. In comparison, Airbnb's total revenue was 4.8 billion in 2019. So realistically, Airbnb is not going to capture the entire hotel booking market, but I believe Airbnb will continue to steal market shares from the traditional hotel industry because more and more travelers, especially the younger travelers in their 20s and 30s, are using Airbnb to save cost instead of booking from hotels. So looking ahead, I believe Airbnb will take about 2 to 3 years to return to its 2019 revenue. This depends on when the travel industry will return to the normal level before the pandemic started. Now, the US Federal Reserve is holding its interest rate near zero until 2023. This means the Fed is predicting that the economy will be back to normal by 2023. In terms of revenue growth, Airbnb is not going to have the same high revenue growth rate as before. The company had a compound annual growth rate of 51.22% each year between 2015 and 2019. And between 2017 and 2019, the company's revenue compound annual growth rate was 36.96%. Management said, "Our revenue growth has slowed in recent periods and there's no assurance that historic growth rates will return. Our year-over-year growth rate in revenue decreased in 2019 as compared to 2018 and also decreased in 2018 compared to 2017. So what are Airbnb's major risks? The first biggest risk is the COVID-19 impact on the travel industry, or specifically, how long it will take for the travel industry to be back to normal. Airbnb's gross booking and revenue in 2020 are much lower than in 2019 because of the pandemic. It may take Airbnb 2 to 3 years to return to its revenue in 2019. The second biggest risk is that local regulations can restrict and deem Airbnb illegal in certain cities or certain areas. Airbnb has little to no control over regulations that can restrict short-term rentals. If Airbnb is banned from a major city, it will have a huge impact on Airbnb's gross booking and revenue. And also, many locals do not like Airbnb because it affects the real estate market and it causes rents to increase if there's a shortage of rental units in that area. The third biggest risk is Airbnb's slowing revenue growth in recent years. Airbnb's prospectus even stated that the company's revenue growth has slowed in recent years, even before the pandemic started. This means the company should not have a high valuation based on the same high growth rate as before. The fourth risk is increasing competition from the biggest online travel agencies, such as Booking Holdings or Expedia Group. Some of these online travel agencies are also offering short-term rentals, but I believe most travelers will still use Airbnb's platform first if they're looking for short-term vacation rentals. In summary, is Airbnb a buy, hold, or sell? While I like Airbnb's vacation rental platform and its business model, I would not buy Airbnb stock for these four main reasons. First, I believe the stock is overvalued right now. For example, the company was valued at $35 billion in 2019. Then its IPO was valued at $47 billion 2 weeks ago. And now the market cap is at $94 billion. In a more reasonable case scenario, if we use the same price to sales ratio as Booking Holdings to reflect Airbnb's future revenue growth that is expected to slow, Airbnb's fair intrinsic value should be at around $71 per share or $46 billion in market cap. This is very close to Airbnb's IPO valuation. In comparison, Airbnb is at $157 per share or $94 billion in market cap. Second, local regulations can restrict Airbnb from operating in any areas or any cities. If Airbnb is not allowed to operate in any major city, it will have a huge impact on Airbnb's gross booking and revenue. Third, I do not like investing in the travel industry because the entire industry is very cyclical and because there are many unpredictable events such as COVID-19 that can impact the whole travel industry. Airbnb's future revenue growth will largely be dependent on when the pandemic is over, when the COVID vaccines will be available to the masses, when travel restrictions will be lifted, and when travelers are more confident traveling again. Fourth, according to Airbnb's prospectus, Airbnb's revenue growth already slowed between 2017 and 2019, even before the pandemic started. Airbnb's current stock price of $157 per share or $94 billion in market cap is assuming Airbnb will have the same high growth rate as before. So with all these 4 factors combined, I would not invest in Airbnb stock. This may not be a popular opinion. I will give Airbnb a sell rating because I believe the stock is way overvalued right now. I believe the company should be worth around 46 billion in market cap or around $71 per share, which is very close to the IPO valuation of 47 billion. However, if you're investing in Airbnb, make sure you do your own research first and always wait for large drops in stock prices so you will have a larger margin of safety to reduce risk. If you like this video, smash the like button, subscribe and turn on the notification button. I will continue to make many great videos about stock investing and personal finance that will help you become a great investor. This is Victor from the Intelligent Investor channel. Thank you for watching.